Hello, this is the Tradesight US Stocks, Futures, and Forex Market Preview for the week beginning Sunday the 19th of September 2021. We are post triple expiration, 100% ready to move into, we've already been on for a week, the December futures contracts, but also the next quarter worth of options and everything that goes with that. Here's a look at the ES front month futures. Oh, I'm sorry. We usually start with the Forex side, so let's do that. Here's the dollar index daily chart. Up a little bit this week. Maybe we're going to start to get to the point where we can get back to full size in Forex, but there hasn't been. This is the first signs of life finally, so we'll see what happens. The euro dollar daily chart down obviously this week, the inverse of the dollar index as usual. The pound dollar slips. The Aussie dollar also slips. The euro yen. Yeah, not very interesting there. The pound yen also down just a bit for the week. So it wasn't a super exciting week, but at the end of the day, Forex is still not out of summer, what we'd call summer months. So here's the 30-minute candles for the week. So you can see high to low is 120 pips or so on the euro dollar. But look how bad, like just Monday, Tuesday, Wednesday, so flat, nothing happening the whole week. And then, we finally... Thursday, let me scoot this over so you can just see, this is the new week already started. So you can see like so flat, especially Tuesday and Wednesday. 30 pips of range for the whole 2 days. So it's just not exciting yet, and we can't get too into it. Here's the same thing on the pound. And, while this will always be a little bit better, or should be on average, it's still only 150 pips. So this is not the most exciting thing we like to see. In Forex, it's just not that time of year, and there's not much else to focus on. But, if we start to see action consistently, we'll get back to full size. So that's where we're at with Forex. There's the ES front month futures contracts. Is this one you can see starting to break down. And this is, like we said, September, historically the most negative month of the year. And it's already down, we're halfway through, and it's already down from the highs. The high was basically September 1st or right around there. And then we've been down ever since. Let's see if things start to pick up, because remember, it's that September into October. Most people don't realize the biggest crashes occur around options expiration in October. So that will be, if that's going to lead, so usually what it means is we're heading down, and then as things start to panic and fall apart, that weekend around October 15th could be something to watch. That could be very significant. But we're breaking the trend line here on the uptrend that's been in place for a while. And that's good, because it means we're going to start to get some volatility. So you'd love to see like a September, October dip. Harder the better, and a reset would be better for us. We'll make more money on that move. And then, we can start talking about the next 6 months after that, and just having a better trading environment, generally speaking, because the summer was obviously very slow. Crude oil down 66 cents to 71.31. Gold down $2.80. Not much there on Friday. ES, well, here's the thing. This is the ES currently showing down 33. So keep in mind, this is already showing, I'm late doing this. This is already showing Sunday, Monday. The projection is down 33 for Monday. So that last candle is actually not just Friday's close. It's actually including what's going on right now. And the NASDAQ down 83. So just keep that in mind. The S&P cash loses 40.76 on Friday. That's a better look at where we're actually at. The NASDAQ 100 was down 182. So that's great. Again, we're still up, thousands of points for the year on the NASDAQ, but does it make sense? We'll have a bigger talk about this in the next couple of weeks. SOX down 52 points to 34.21. The biotech's up 31.66. Russell 2000 up 3.95. And again, wow. I mean, this thing has gone nowhere basically since mid-January. This is the flattest I've ever seen the Russell for that long. I mean, you're talking about 9-10 months here. And Dow Jones Industrial Average down 166 on Friday. TLT, the 20-year bond ETF, down 72 cents. Not a big deal. The advanced decline ratio on the New York was down negative 871. The funny thing is, on the New York, the advanced decline ratio was actually just barely positive, but most of the big stocks were down, so that was kind of weird. But again, it is what it is. Trend 1.24 on Friday puts the 10-day at 1.17. That's not a signal. Volume ended up at 6.7 billion shares, but that's just because of the options triple expiration. So it really wasn't that great at the close, and then you get an extra like 2 billion shares as they cross out all the positions for the expiration. VIX closes up $2.12, so we know that's been on the rise here. Apple down $2.73. Amazon down 25.72. Facebook down $8.34. Google loses 56.20. Goldman Sachs down 5.22. Netflix was up actually $2.85, and Tesla was also up $2.50 on the session, although that's not quite, it doesn't show as much there. Zoom up $9.46, but this thing's been beat up. It's near the very lows of the last year. And there's that. All right, so then if we look at the intra-week action, so what we're going to do is go to futures and go to 10-minute candles. Actually, it's not much of a week. This is what's amazing. Like in the futures, look at that. Monday, you gap up, you sell off, you fill, you close, you're almost closing negative, and then you come back right at the close to close, slightly positive. Tuesday, gap up, sell off. So both days are sell-off days with a very late Monday with a late rally, Tuesday flat at the end of the day. So at this point, you're down for the week, but keep in mind it's more selling than buying because you gapped up both days. Wednesday, a flat opening, right? A flat opening. And this was the one day where we really did actually move up a bit, right? And so this takes us back into green territory for the week. And then Thursday, a flat opening, sold off and came all the way back up and almost back to even, well, basically back to even for the day, and then sold off just a little bit. At this point, you're literally up like 10 points for the week. And then Friday is the little gap down sell-off. Didn't get out of control, but it's still a little bit better move. You don't usually see much of a move on triple expiration, and this is more negative. So we closed at the lows of the week, but again, only losing like 20 points or so. It wasn't anything major. So there's not a lot here yet. So, but we are definitely showing signs of finally getting that break that we want to see to the downside in the markets. All right, in terms of economic data, let's look at everything. So Japan and China start on a bank holiday. German PPI, 2 a.m. Eastern time on Monday. We got the NAHB Housing Market Index here in the U.S. in the morning at 10 a.m. We've got the Westpac Consumer Sentiment out of New Zealand. China's bank holiday, monetary policy meeting minutes out of Australia. Credit card spending out of New Zealand. Foreign direct investment out of China, trade balance out of Switzerland, public sector net borrowing out of the UK, this is all on Tuesday now, CBI industrial order expectations, NHPI out of Canada, housing starts, building permits, and current account at 8:30 a.m. Eastern time on Tuesday, CB leading index 30 minutes in from China, and then Australia is right after that. There's really nothing here in the US so far this week that really matters. That night you've got MI leading index out of Australia. Japan has their rate announcement going into Wednesday, then their press conference. We've got the consumer confidence out of Europe, existing home sales at 10 a.m. Eastern time Wednesday here in the U.S. Crude oil inventories at 10:30. We have a 2-day Fed meeting, so the announcement is Wednesday. That means Tuesday could be a little late, Wednesday later until the announcement typically. And then our press conference at 2:30. Flash manufacturing PMI and services PMI out of Australia. Bank holiday out of Japan going into Thursday. So not a lot here, and we're already into Thursday. French flash manufacturing and services PMI numbers. Swiss National Bank policy rate. German flash manufacturing PMI and German flash services PMI. Same thing out of Europe, same thing out of the UK. Then the UK has their rate announcement. So we've got a lot of rate announcements this week, right? Which could, I mean, probably nothing going to happen, but the language out of all these banks is what matters. Core retail sales out of Canada, unemployment rate, I'm sorry, not rate, the weekly initial and continuing jobless claims numbers at 8:30 a.m. on Thursday. Flash manufacturing PMI, flash services PMI, CB leading index at 10, natty gas at 10:30, trade balance out of New Zealand, consumer confidence out of the UK, national core CPI out of Japan, flash manufacturing PMI out of Japan, and then on Friday just the German import prices, CBI realized sales out of the UK, and new home sales here in the US. So it's not much of a week. I mean, there's a lot of rate announcements, but there's not a lot of data. So we'll see what that leads to. But again, we're free and clear of all the options and futures rolls all the way to the end of the year until Christmas week or the week before Christmas. A couple things to focus on. We're still about a month away from the time zone changes. We'll just see what we get. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.